Yeah.
If you touch the money, it's not guaranteed to even age 90. I constantly have people reach out to me. They're 80 years old. Insurance is done. Guess who that happens to? Us.
Coming up on the Melanin Money Show.
The agents need to look at themselves as financial advisors and actually have an ongoing relationship.
How many agents are no longer in the business after a year?
90%.
99% of them. You need to ask your agent, why are you in this business? Is this a career for you? I want to know if you're going to still be here. Nobody ever says, I want to wake up and be a life insurance agent. Right. Actually, a lot of people look at it almost as a scam.
What's up, family? Welcome back to another episode of the Melanin Money Show. So we have another special guest on because you and I have been connected on social for a while, and we've been meaning to connect in person.
Been trying to get with you.
But hey, listen, now you're here. Now we're here.
Right.
Welcome, Lindsay, to the show. How you feeling, Lindsay?
I'm feeling great.
Feeling great.
I'm feeling great.
Feeling amazing.
Always.
She brought us some gifts, y'all. You know what I'm saying? She must have thought. You know how they say the camera adds 15 pounds?
Yeah.
You know what I'm saying? She must have
baby.
I'm sorry. I made a mistake.
I'm just giving her a hard time.
In the gym,
We just giving her a hard time. They were quality, though. I'll give her that.
Yeah.
Very quality, but nah. But Lindsay, so glad to have you on the show because what you do, speaking of creating legacy and transferring wealth, right, is kind of the essence, right, of what you do at the core. And so the reason why I wanted to have you on the show from an objective standpoint is that the concept of life insurance, I feel like has just gotten, like, for lack of better terminology, bastardized, right?
It's so many opinions. There's so much stuff out there right now.
Yeah. And so, I just want to be able to have a really just like an educational conversation to help people understand like the power of life insurance, what its true purpose is, how you can leverage it, how you can maximize it. What are some of the myths that you hear online that people think about? But let's just kind of get into it. But before we do that, so tell us a little bit about you, your backstory, and how you even got in the space of doing what you do now.
Okay, so I've been in this industry now 14 years. I have been a licensed agent since 2010. Funny story on how I got in this business was I used to be in the entertainment business doing marketing, had a styling agency, all these different things.
Yeah.
And I went to Howard and have a degree in finance. So I've always been into money, how it works. But what ended up happening is obviously when the market crashed and they were cutting marketing out, that's the first thing that goes. Right. Everybody wants sales, but they get rid of marketing first. And so I thought that I needed to get into a space that was recession-proof. And finance always is recession-proof because people always need to check on their finances, whether things are going up or down. And that's how I ended up getting into the life insurance industry. And the thing about life insurance, nobody ever says, like, I want to wake up and be a life insurance agent. Right. Actually, a lot of people look at it almost as a scam. But if you really know the industry, the financial services industry, the most millionaires are made from being in the financial industry. I'm not talking about people who own businesses, but just people in general who are millionaires, and people just don't understand the space. Right. So I got into this space because I thought that this was going to be a space where I didn't have to clock in. I was going to be able to make whatever I wanted to make based off of what I do. And I've always been a person, I've never had a 9-to-5 job, always wanted to be able to make money based off of what I do. And now after listening to you guys, processes and everything and scaling, now I'm on something else.
You just want some masterclasses.
I'm on something else now. But that is why I originally got into the business.
Got you. Yeah. And so I feel like people understand it from a conceptual level, right? Life insurance is, you get it, something happens to you, your family's taken care of, right? So like from if someone didn't know anything about life insurance and they're walking into your office and they say, hey, I've seen all this stuff online about life insurance. I just had a new baby. I'm a successful business owner, sole provider for my household. I'm married, trying to set the whole situation up for you, right? Like, what is the conversation that you would have with that person about life insurance? and the importance of it and the role that it could play in their life?
So the biggest thing that I do that I think is probably really different from other agents is I'm going to put this in a perspective that this is going to be a financial tool for your life in general. So first, we're going to step back and ask. I always ask, what's your goals? Where are you now and where do you want to be?
Yeah.
So I need to know, what is it? Are you planning on starting a business? Are you planning on investing? Do you own real estate? Are you in debt? What does the expenses look like in your household? What would you like your kids to do? What do you want to leave them behind? What's the legacy you want to provide for your family? And from there, I'm now going to put a strategic plan together, because what people don't know about insurance is it's called life insurance because you actually can use it while you're alive. It's not just something where when we die, we get paid out.
Right.
But when we talk about us as a people, the problem is the disconnect with life insurance is going to be that they haven't ever received any money before.
Yeah.
I actually never thought about that. That's why. Okay,
That's
that makes
the
so much
disconnect.
sense.
If you think about other cultures, they're getting money from grandparents passing away, great grandparents passing away.
Yeah.
We are not
that's real.
receiving the money because we're almost the first generation that's really starting to say, let me get this insurance policy and keep it.
Yeah.
Because we're also one of the biggest communities to purchase life insurance over 5 and 6 times because we keep letting it lapse. And so we keep getting less and less of a death benefit because we're getting it at an older and older age and it's costing more and more money. So now we're really not leaving nothing behind.
Right.
So what I say to this family that comes into my office is I say, we're going to put a plan together and we may not be able to do everything today. But we're going to start the plan. And as your income grows, we're going to grow our process. We're going to grow the insurance that matches with that. And we're going to cover all your goals and make sure that we're creating assets for you and your family while you're alive and when you die.
Yeah. Yeah. And I think that what you just said is remarkable because I don't think I've heard anybody else say that the reason why our culture is so against life insurance is because we never received it.
Right.
Like,
so we don't have an emotional connection.
Yeah, we don't believe that it can actually work for us. And that, just for me, so my father passed away when I was 16. And I'll never forget. He had the life insurance through his job, which is a trash plan. Yeah. So it was like $25,000 in life insurance to pay for his funeral and to get split up amongst 3 siblings.
Right.
So we got like $4,000 each. And I was like, What's father this? Just passed like a fourth of it. I'm doing $4,000. You know what I'm saying? And so I just realized that the probably reason why I was jaded, to think that life insurance wasn't something that was immediately necessary. If I would have got $100,000, if we would have got $100,000 each, it would have been a different story.
Imagine getting $1 million, tax-free, a check. Your bank account might have been at $5,000. It's at $1 million and $5,000. Do you understand? I think we're not really letting people feel what it would be if this was to happen. Because I've had people say to me, nobody left me anything. So I'm not leaving my kids anything. And I'm like,
crazy.
What?
Yeah.
Because I don't understand. Just because you didn't get the feeling, why you don't want to leave the feeling behind?
Right.
Yeah.
So I think that one of the other issues are there's too many people talking about life insurance that are not licensed, don't know nothing about it, have not experienced receiving the money, and they're giving these opinions and people are thinking that they're facts.
Right.
So one of the things, because I have a mentorship where I mentor agents, and one of the things I teach them is, listen, you want to treat these people like as if it was your family. And so if that's the case, you need to make sure that they understand the feeling of what they're doing, what this is going to do. And so one of the things I think with all of these opinions, you got people telling you buy term, invest the rest. You got people telling you you don't need insurance. You have people saying insurance is a scam, all of these things. And you know what I tell them? I say, guess what? That's your family and your issues. I'm going to tell you this. When I pass away, my daughter's going to get over $8 million in life insurance money. And she also has her own policies that were going to be paid up that my grandkids will receive money for. I've used my insurance when I've had hardships. I've used my money to renovate my house. I've used my money for so many different things. She's about to go to school. If I need to, I will dip into it. You understand? So experienced it. So I don't understand what's the scam part about it.
Right.
I don't understand why you would tell me to buy term and invest the rest when half of us are not investing.
Right.
They're buying the term.
Yeah.
They're not doing the other side of it. So that's why you can't tell our community that, because they don't understand investing. So even they see all these things about doing. Everybody can't have a George in their pocket and be able to, because that requires minimums. And a lot of people don't have $250,000 minimums to dump into an account every year. So they got to figure it out themselves. Yeah, and that's where I come in as a life insurance agent, as a broker. I come in and I tell them, listen, we can do all these things that you want to do, but it's going to take some sacrifice. You have to pay a premium.
Right.
You got to stop telling me that you want $200,000 in cash value in your policy next year with a $100 budget, $1,200 a year, $2,400 in 2 years, and you want a $200,000 return.
Yeah. As a new kid say, the math ain't mathing, right?
Yeah.
It's not mathing. Yeah. I mean, George, if you know something.
If you
know something, let me know.
I don't know no secrets.
I got 200 to give you
all I know is
but I don't know about it.
Yeah.
But here's what I think the disconnect is, honestly, Lindsay. I think what the disconnect is, and this is in all of our industries, not just life insurance, but people get on the internet and they'll speak to all these possibilities on what can happen, right? And so on the show, I would love to break this down, but like you hear people say, if you get a policy and you get a properly structured life insurance policy, but no one ever talks about the proper structure. Right? It's like, okay, well, don't show me the illustration on the theory, because I started out on the insurance world. I was a top agent for Mass Mutual. They still use my name to recruit Black people to this day, right? But my point is, it's like, if we can just educate people, right, beyond the sound bites, and like, hey, yes, life insurance can be a powerful tool. Yes, you can use life insurance to become your own bank. But here is what it looks like. Because people are so misinformed and they don't understand. And it's not bad that there are premiums associated with it, that there are fees associated with it, because that's anything. But it's like, let's not oversell and undereducate. Right? So what I would love for you to do is to break down how the policy needs to be structured, right? And what it actually looks like to leverage it in real life.
I love that, because you're right. People just need to know the steps.
Right.
So if you are looking to become your own bank, infinite banking, this concept, the first thing you need to understand is it's going to require a commitment.
Right.
It is life insurance, and you must pay for the premium. There are 2 policy types that you can use to do this concept. It's either going to be universal life or it's going to be whole life. Now, both of these types have multiple variations, and some of them are going to get you to your goals faster. But again, goes back to budget. So you're going to first choose either UL or you're going to get a whole life policy.
Okay.
After you do that, you're going to want to maximize this policy's cash value growth so that you can reach these goals. So that means if your premium is, let's just say $200 a month, maybe you're going to dump in $350 a month, because you're trying to maximize the growth in the cash value. So that means, again, more commitment. The more commitment you give, the more money this policy is going to grow. But there is something called a MEC, a modified endowment contract. Right. Yep. So if you go over this number, that means the IRS deems this an investment and it becomes taxable. So we want to stay under the MEC if you are somebody who is going to use the money. If you're transferring wealth and you ain't touching it, then it doesn't matter if the policy makes. But if you want to use this policy, then you want to make sure we stay under the MEC. So we're going to overfund this policy right under the MEC. So your insurance agent should be able to structure the policy and be able to make certain amounts of money be able to be dumped into the policy. After that, we're going to take money out for things that are going to be an asset. This is where people get it wrong.
Big facts.
You have to take the money out. Let's say you're purchasing a property that's $50,000 and it may need $20,000 in renovations. So you're at $70,000. So we borrow $70,000 from the policy, and now we sell this policy 6 months later for $150,000. You need to pay the $70,000 back. The goal of this thing is to repeat the process as you keep adding on assets. You're growing your assets, but your policy is becoming whole.
Yep.
So you're creating a bank per se, but the bank has to be funded.
Yep.
And so the problem is people come to me and they say, hey, I want to create a bank, but I have $50. Well, your bank is going to be relative to this $50 you have. I can't create you a $500,000 bank with a $50 commitment.
Yep.
Right.
It's relative. Now, the thing that happens in this policy is if you have time, which a lot of people, we don't have time. Everybody wants their money today.
Yeah.
So if you have time, then it will compound year after year, and it will look really nice later on. It will be 2-3 times what you probably put in. Your death benefit will be way more than what you put in, but not in the beginning.
Yeah.
So there are policies that you can put money in and get 85 to 90% out in year one. But what will happen with those policies if you don't put the money back? It will end.
Yeah, it will come, and that money will become a taxable event.
Exactly. Yeah. So you can use the tool immediately. And one thing I want to say about that is if you're doing that, understand that it's a percentage of the money. Right. So you have to have the money.
Yeah.
So if you needed 100,000 and the percent is 80%, then you needed to put almost 120,000 in there.
Right. Yeah. I think the biggest misconception that cause people to look at life insurance as either a scam or something they don't need is they're expecting a miracle. And I think if you adjust your expectations to reality, it'll make the reality seem real. Because people, like to your point, I'll put $3,000 in the policy. How much do I got $15,000 next year? No, you don't.
Right.
If you put $3,000 in the market today, whether real estate investing, that's not going to happen. So I think you just come up with realistic expectations. And one thing that we joke about, but it's real talk. Like, in my opinion, don't try to become your own bank until you have money in your actual bank.
Right.
Like if you don't got money in your Chase bank account,
right?
Like, don't try to become your own bank over here because you just prove that you can't even keep money back. Any money in a savings account.
Getting returned checks, okay?
Crazy.
You're trying to set up. I've had people try to set up policies where they're trying to create $100,000 in 1 year, and it's bouncing. Yeah. How do you have a premium for $2,000 a month and it's bouncing? Something's not right with your financial plan. Why would you set yourself up for something for $2,000 a month and you don't have this money in there at least for 6 years?
Yeah.
Right.
Yeah.
Right? Yeah. Why would you set yourself up for a plan like that? And so I think the other issue is you have agents, and an agent is like a client in the beginning. They don't know, just like the client don't know. I'm telling you, when I train agents in the beginning, no, seriously, they don't understand the products either. They're learning too.
And I think that's the problem with the industry, though. No offense to the life insurance companies, but like, you don't need education to sell life insurance. You need to get your license, right? But then when you start with the company, you just go out and start selling.
They just put you out there.
They should make a requirement for you to understand the policy inside and out.
So they do have a process where you got to go through, but you know how that is. Yeah. You just got to learn enough for you to be able to pass this test, and then you're good. But that's not reality. When you go out and you talk to clients, you're going to deal with something different with each client. Yeah. So only experience can teach you that. Right. That's why when I started out, I had a mentor out the gate, and he was a multi-million-dollar agent, and he taught me so much that the company never taught me. Right. To this day, the companies have never taught me, and I'm a broker. So that's why I've set up the mentorship, because the game that I give these agents, they don't learn it at the company. And so now they're able to do a better job with their clients and be able, you have to educate the client. Because the thing, for instance, me personally, I'm not a UL lover because I don't like the unknown.
Yeah, me neither.
Right? I'm a whole life person. But I'm not pushing that on you as my client. As my client, I'm telling you facts. Whole life is a guaranteed death benefit, can have dividends, fixed premium. UL is a flexible premium, no guaranteed death benefit, no dividends. So I'm telling you facts. Both of them you can overfund. Both of them can be for retirement. Both of them can do everything if you structure it that way. The issue is, I don't want the unknown of the non-guaranteed death benefit. I don't want the unknown of not knowing what the cost of insurance is. Right. As a client, you really don't know that.
Yeah.
Right.
So when I sell you a UL And I'm telling you, and I don't do this, but agents do this. They sell you a UL and they're going to tell you you're going to have $200,000 a year in retirement. And guess what? Retirement comes, you don't even have $50,000 a year. You know why? Because you didn't put in the extra money. Mm-hmm. The cost of insurance raised. Mm-hmm. The index didn't perform like it said it was going to perform. The illustration was on 8% and it performed at 3%. Right. So I'm not dealing with that.
Okay.
But that if you go online, that's all you see. IUL, retirement. IUL is the best. IUL, but the client doesn't understand the micromanagement that needs to happen to have an IUL. You need to know the target premium. Mm-hmm. You need to overfund that target premium because the years that the index don't do good, guess what? You didn't make enough interest to build that policy to keep it. And the index universal life only guarantees you to age 90 if you don't touch the money. Yeah. If you touch the money, it's not guaranteed to even age 90.
Right.
Okay.
So I constantly have people reach out to me. They're 80 years old. Insurance is done. They'll tell me, hey, I've been paying on it for 40 years. That's why we think it's a scam. Because guess who that happens to? Us. Yeah. You know why? Because our agents are not keeping up with our...
The problem is, I think that agents need to look at themselves as financial advisors and actually have an ongoing relationship. You want the ongoing premium for your client because every time they pay their premium, you get your kickback. Mm-hmm. But you don't want to treat them as a client. So George, if you had a client that had a retirement goal mm-hmm. and they were behind in their retirement goal, you would hit them up, yearly like, hey, your retirement goal was this. We based it off this performance. Performance is down. Right. So if you want to keep the same goal, you need to invest this amount more. Right. But the agent doesn't go back and tell
they're not at all. But this is why. How many agents are no longer in the business after a year?
90%?
99% of them. Let me tell you, when I got into this business, I started my training with 626 agents. Do you know that was in February? Do you know that by the time I took the test in October, it was 8 of us? Do you know by the time it was the next year in 2011, it was 2 of us? It's still only 2 of us out of that entire group. So what that shows you is you might have wrote them business. You wasn't even in the business a year. Mm-hmm. So it's key for you to have, when you're a client, you should absolutely say, why are you in this business? Mm-hmm. You need to ask your agent, why are you in this business? Mm-hmm. Is this a career for you?
Right.
Yeah. I want to know if you're going to still be here. How long have you been in this business? Do you even understand the 3 types of insurance?
Do you have insurance?
Do you have the policy that you're trying to sell me?
This is another thing. And I started out with New York Life, right? And New York Life, one of the things, that's a lot of people that don't look like us work for New York Life. Mm-hmm. And so one of the things they would say is everybody needs to buy $1 million whole life. But $1 million whole life, I was 27 at the time. I think it was maybe like $600, $700 a month. And at the time I was like, I can't afford that. I'm going to buy $1 million term for now. Yeah. But after being in the business for 2 years, they were like, you got to get your $1 million whole life. Like, what you doing? So I finally, brought into the $1 million whole life. But most agents are not making enough money. And don't get me wrong, a lot of agents, it's very easy to make minimum 6 figures in this business. Sure. Yeah. Easy. Yeah. That's easy. You don't have to do anything. But they're not doing nothing. Yeah. So they're not even making that. Right. And so because of that, of course they can't afford $1 million policy. Mm-hmm. Yeah. You understand? So how are you going to sell it?
Right.
How are you going to sell it?
You don't even have it yourself. You don't believe in it.
Yeah.
Obviously.
Yeah.
You know what I'm saying? It's like so many realtors that don't even own real estate.
They don't even own
real estate. Right.
Yeah. They don't even own homes.
They telling you got it's your home was your biggest investment. Okay, bro, where yours at?
Hey. Aren't you tired of buying courses in those emotional states when you want to get a result, but then you actually don't do anything with the course? Do you know on average, the completion rate for a course is about 2%? But here's the thing, it's not entirely your fault. The problem is you buy the course, but you don't have access to the source who actually created it.
See, that's why we're doing something different. With the Melanin Millionaire Club, you're not just gonna get access to courses. You'll get access to the people who created it so you can get your questions answered. Because it's not just about learning, it's about taking that information so you can start earning. So the Melanin Millionaire Club is gonna give you access to courses, but not just that, it's an entire university of information. We have financial flicks, we have hundreds of previous recordings, but more than that, y'all, we have an amazing community of people just like you who are trying to become a first generation millionaire. So like GA said, like You can survive without community, but you can't thrive without community. So this is the place you need to be, right?
100%. Because here's the thing. If it was just about information, we'd all be billionaires with six packs. So that's why every single Monday, we're going to set the tone for your week with Melanin Millionaire Mondays, where our entire community is going to meet up. The energy is going to be high. We're going to set the intention for what we're going to execute on so we can move the needle forward, and Carter and I and the rest of our team can keep you accountable.
So that's enough information. You see the rest in the club. All you got to do, click the link below, sign up, and start your journey to your first millionaire year. Let's get it.
Let's go.
Yeah.
Right.
Yeah, so it's very interesting.
And part of it is on the consumer to ask those questions, right? When you work with an accountant, you need to ask them the questions that you need to know. Are they going to actually be a good accountant? If you're working with a financial advisor, ask them the question. So I think it's just across the board that both sides have to take responsibility, because we can't, if we want to build generational wealth, we cannot continue thinking the way that either our parents did or the generations before them, that everything is a scam because it didn't work for you. You think investing is a scam because your family never reaped the benefits of investing, right? So like, I think it's up to us.
Or because you lost your money, you think it's a scam.
Right.
Well, you ain't lose it, but you probably poured your money out at the wrong time when the person who advised you told you not to do it.
Or listen to somebody on the internet who told you to buy some crypto that you didn't know about, and you lost it, or buy NFT or something. So. Yeah. What is one of the most impactful stories you can remember from somebody that benefited from life insurance?
So I got this client, and I always use this story because I think he did exactly what the model of create your own bank is, which you don't see too often. Had a client 5 years into the policy. He reaches out to me. He's like, hey, Lindsay, I've been driving the truck for another company all these years, and I want to get my own truck. How do you think I could get the money? And I was like, and he's asking me because my clients I build relationships with, so they call me for everything, for a cake. They call me. So I was like, you don't need a loan from the bank. I said, did you check your policy to see how much money that you've built in your policy? I said, you have a pretty sizable policy. How much do you need for the truck? So he's like, I just need $15K. And I was like, oh, okay, let's take a look. So we look. He has about $22,000 in the policy. He borrows the money. He buys a truck. Couple months later, I seen he put the money back because you can see people's cash value. And then he purchased another one, and he now has a full-on multi-million-dollar truck business. He has brought over 15 trucks. And it started from a life insurance policy that he honestly was just getting to protect his family. He really wasn't even getting it for the cash value purposes. And he was like, Lindsay, you don't understand how you changed my life. And it's something so simple. And I was like, I'm happy that you trusted in me to have a conversation with me before you was about to do something for your business. Right. Because he might have went to the bank.
Yeah.
And been paying the bank back interest and, and wouldn't have possibly had the same result.
Yeah. So what do you say to people who say, why would I save money in a cash value life insurance policy when I can save money in the bank?
Oh, I hear that all the time. So first of all, it's two sides. Life insurance is a dual product. One is protecting your family. So if you died, is the bank account going to pay the death benefit to your family? No, it's going to pay exactly what you have in it. So if you have $100 in it, your family's going to get that $100. But that $100 that you've been putting in your life insurance policy might be $100,000 policy, or might be $1 million policy if it's term. So I would say, one, that doesn't provide any protection. But two, you get compound interest in your life insurance policy. In the bank, even if it's a high yield, and we're talking now, you might get 4.5. What
is the average insurance on a whole life policy right now?
The average yield rate? Right now is about 6%. Most of the companies are doing about 6%, 6 point.
Did they typically try to adjust and correlate with just rates in the market? I mean, when I say rates in the market, I mean like the interest rate market.
No, so typically the interest rate is really based on the financial status of that company, which is why you want to be with a better life insurance company rather than one that's not doing so well, because they're not going to have the same rates. So typically it does matter in insurance what company that you're with, because the return could be different.
Okay.
Got it.
So the average return is about 6%. The max you're going to get in a high interest savings account probably right now is like maybe 3.7, maybe 4.
Yeah, I mean, you can have some high yield savings accounts that might brush up against 4.5, but now the interest rates are gonna be moving in another direction. Yeah, probably 3.
Do you know if the interest rates are locked on the policy? Like if somebody gets a whole life policy, does the interest rate adjust based on interest rates?
No, it adjusts, but even I'm gonna say since 2010, the lowest I've probably even seen was about 4. Like in the earlier years.
Even since 2010, I got my first policy in 2011 when I got in industry. It was like the lowest I saw was like 404.
Yeah, I haven't seen under 5%. I mean, maybe 2014. Mm-hmm. Like it's been pretty steady in the 6 and in that range of 6.1, 6.2. So yeah, I would say it's pretty steady.
And here's because I used to be against it for a while. I actually got my first like cash value policy last year.
Mm-hmm. And you didn't go through me.
I didn't know you back then. Now I know you. But I think it's really helpful for people who can't take risk. I know a lot about finances, so I don't care if the market goes down 10%. I'm not going to sell my investment. So I would rather have the upside of the market going up 30% like it did last year. Mm-hmm. But for people that can't take the downside, they also should not try to enjoy the upside because they're going to just take their money out at the perfect wrong time. So I think for people who know they can't take risk, a life insurance policy could be a good vehicle for them to park money in because they get the guarantee rate.
It's very stable.
Yeah, but like if you want guarantees, you have to pay for that, and which means you just won't have the upside, right?
Right.
But then you at least protecting your money. So
100%.
I think there is a place for it. I don't think they're like because some people like either all in on life insurance or all against life insurance. I think it's a necessary tool in your financial plan. I personally don't think it's the only tool that should be in your financial plan.
I think that's the issues with most agents, right? So it's like you, for example, when we first met, you out the gate say, hey, this is what I do, this is what I don't do, this is why I want to connect and collaborate, right? Some agents will try to fit a square peg into a round hole and tell you this is the only thing. You should only have life insurance. It's better than every other investment. And to someone who doesn't know the financial markets or whatever, they're just going to believe that, right? And so I think the best world is where you understand that it's not either or, it's both and.
Thank you. Thank you. That's exactly what I was thinking. And I was going to say that because I hate the fact that people feel like they need to choose. It's not life insurance or an investment account. It's both. It's not a real estate investment or a business. It could be both. And I think that if we can understand that you got to do what's best for you. If you don't like real estate, then maybe you don't get involved in real estate. Right. But life insurance is a way for you to leverage your money. It is a stable, it's pretty much a stable policy. Obviously, in life insurance, there are policies that are actually in the market, like the VUL. And that is in mutual funds. Right. And you can actually choose mutual funds. But it has a downside, but it does still have the insurance protection. But I think that if you're an investor and you're okay with doing the market, then you don't need to really mix your insurance in that. You can just get your insurance for your stable side. You can have your brokerage account or your managed funds over here. I don't think you need to choose one or the other. I think it's a both.
Yeah, well, I think one of the best illustrations of having both is the buy, borrow, die strategy. Have you heard about this? Okay, yeah. So it's like if you say you buy a bunch of real estate, you buy $1 million. My bad, y'all. I knew that was coming. Let's say you buy $1 million worth of real estate, right? And then over your lifetime, let's say you pay down half of it by the time you're like 60. You can then borrow against the $500,000 equity in your property, and you can live off that $500,000 tax free. And then you use some of that money that you borrowed against, which is tax free, to fund a life insurance policy of $1 million, right? Then when you die, first of all, so you lived off that $500,000, let's say for the last 10, 15 years of your life. And then when you die, the life insurance policy that you pay for, their kids get that $1 million life insurance policy. They can take that $1 million, pay that property off. Now you just pass down $1 million property to your kids, and you got to live off the equity tax free. So it's a strategy that you buy the real estate, you borrow against the equity, and then when you die, you use life insurance to pay out the debt on the real estate property. It could be a good way to use life insurance, but also still stay a real estate investor, so you can have the best of both worlds.
Definitely, I think a lot of real estate investors don't really like it's one or the other. They like insurance or they don't. They like it and they're using it, or they don't like it because they feel like they can make so much more money in real estate. And so they don't really feel like, well, I don't need it. My when I die, my kids are going to get the house. The only thing that I say to that is, real estate is a process. It depends on the market at that moment. You may not be able to sell today. You don't know. And still taxes got to get paid. Mortgages got to get paid. Everything still has to get paid while they're figuring out this process. Right. Depending on if you have a trust or a will or whatever, it takes some time. And I do feel like having I always tell my real estate investors, have some cushion life insurance money to be able to leave to your family while they figure out if they're keeping it, selling it, because when people are in distressed situations, they make crazy moves and they lose money. So if they have the life insurance to hold them over while they're figuring out, because you have money don't mean that your family members can afford the taxes and everything else that's going on with the properties when you pass away. So I do feel it's a safe haven. But of course, in that case, you don't have to get cash value life insurance. You could get a guarantee UL and pay. It's way cheaper. And and you'll cover whatever needs you have if you don't really need the cash asset.
100%. What is one of the biggest, like, I won't say horror stories, but like situations where it's like, man, a family just didn't have this in place and it just really, really like made it really hard for them, right? Because they didn't listen to you, or you just learned about it on the back end and just like, and it kind of convicted you even further as to why people have to have life insurance as a part of their strategy?
Well, a really sad situation. This happened early on when I was in the business and made me really tell people about not waiting. Yeah. It was a family. They were both doctors, mom and dad. They had 3 children and they were about to go on a vacation. And for a while, I had been talking to them and they wanted to get the insurance. Money wasn't an issue. They both was making over $1 million a year. But it was just a time thing. It was a getting to do it. And it's a putting it off because you think I'm good. Yeah. They were in their 30s and they... obviously a lot of people passed away in a car accident. They went away on a road trip and both of them died. Wow. Guess what? Kids wasn't with them. They just the parents went and the kids was in private school, all these things. You know how it is living at that lifestyle level. They had no insurance. They didn't have a will. They didn't have a trust. They had nothing put together yet. They thought they had time. And this is the key issue. And guess what? Everything changed for that family. They were reaching out to me, the family, because we had been in talks for a while. We didn't sign any paperwork. Funny thing is, before they left, I said, we had already discussed what we were going to do. And they were like, what time we get back? And I was like, well, you guys could sign before you go. But this was before we had EAPs. Oh, okay. So I had to physically go and see them. And so I was like, I could come over there. You guys can sign. So at least if they give you the first payment, if they would have died, the insurance company would have had to pay that money out. They were both getting a $2.5 million policy. And so long story short, they didn't sign. So I didn't have their first payment. So it was nothing I can do. But those kids, they ended up having to go live with the sister. Mind you, the sister has no money. So just because, like I tell you, just because certain family members are doing well doesn't mean all the rest of your family members are doing well. And those kids took a complete turn for where they lived. They lived in a nice neighborhood. They were in all of that gone. Nothing.
Yeah, I think the reality that people don't want to face is that when somebody dies, you have enough pain to deal with. You don't want to have money,
financial distress,
be one of those things that ends up you have to think about.
Imagine being that child.
Yeah.
I mean, you spoke on your father passing away, but losing both of your parents and having to leave your home, leave your school, not be in those activities no more. As a child, that's like the end of the world.
And now the kids don't believe in life insurance because it didn't help them out. So why? Like, how do I know? They probably think, well, they were talking to somebody about life insurance, but it never got set up. So life insurance is a scam, and it just perpetuates this cycle that we were just unfortunately talking about. So I just think it's something that people need to really take a good look into. And especially, like, I'm in my 30s. I got my policy last year because I thought I had thank God I have some time, but I think the time piece is something that people just need to understand.
Soon as a child is born, they should get insurance. But the parent has to know that.
Mm-hmm.
Yeah.
Soon, imagine. So I want to give you guys an example of a policy I did for somebody recently. And this child is going to be so set beyond set. Now, it depends on the kind of commitments you can make. But this particular person, I gave a 5-year-old child.
Mm-hmm.
It's a $1 million policy. The annual premium on the policy is $7,300. But it's a 15-year pay. So the parent's only paying it to 15. So by the time this child is 20, it's going to be paid up. It's going to be done.
Yep.
The parent is going to pay about $110,000 over the course of this 15 years.
Okay.
But by the time this child is 65, has $2.8 million in the cash value. Mind you, the parent paid $110,000.
Yeah.
Okay. By the time this child is 85, it has $4.2 million in cash value with a death benefit of $5 million. So what it essentially did was the parent is leaving a legacy to the grandkids of $5 million. The child will be able
tax-free
to
money of $2.5 million
from $110,000 of a commitment that was made years ago. But in addition to that, this is why time really wins in life insurance because you have all of this time. Now, the child, by the time this child is 30, can buy. I think it was about $400,000 or $500,000 in there by the time the kid was like 30, and so. Almost anywhere, they can definitely put a down payment on some sort of home.
Yeah.
Right.
So you're going to put your kid in position to be able to have the down payment. As you guys know, the average family, that's what they struggle on when they're trying to purchase a house is the down payment.
Yeah.
That and the credit. But I'm not going to be in debt because I have this policy. I'm also not going to not have the down payment because I have this policy.
Do you have to borrow? Do you have to have credit to borrow against your life insurance policy?
No.
There's no credit check?
It has
It's just like
nothing
with-
to do.
It's just like
Brokerage
that's
account,
what I thought. That's what I thought.
Right. So these are the things. If this kid wants to start a business, so there's so many things just because this parent committed to this. Now, everybody can't commit to that amount because that's like $7-something a month, right? But even if
People
we
pay $100,000
divided it,
for college all the time.
divided by 7 though, and say you're going to do $100, divide all those numbers I did by 7. It's still a significant amount of money.
Yeah.
Right. But you just have to have the foresight, have to have the literacy and the commitment to be willing to do it. I mean, I feel like we talked a lot about the power of insurance and how that can create generational wealth if you know what to do with it, which I think is a perfect segue to, the question we like to ask all of our guests on this show. So with all that you've seen and, the power of people have been able to leverage life insurance, the things that they've been able to do with it, how they're planning to create generational wealth, what does being a melanin millionaire mean to you from your lens?
I feel like that means for me to be able to have a chance that wasn't really given to me as a child. It's something that now with the knowledge that we're able to gain today, that we really didn't have access to when we were younger because our parents kept finances a secret. And now I feel like the information is out here. And so now I'm able to really have way higher expectations of what it is that I want to do, where my finances could go, how far I can scale, and the chance that my child is now going to have because I'm so much smarter than maybe what my mother was, and not to say it like that because she's a smart woman, but just being literate and having access to information. I feel like now we have hope. Right? Like what Miss Business said, we have hope that we didn't have before.
Big facts.
Okay. Yeah, like they say, if you didn't come from a good family, let a good family come from you.
I love that.
And we truly live in a great society when a man or woman plants a seed for a tree whose shade they'll never sit under. That part,
Okay, now.
Well, hey, listen. I got some lyrics. Hey, listen. Hey, somebody put a beat on. Somebody put a beat on. And now, Lindsay, it was a pleasure getting to connect. Getting to connect this way, right? Not only getting to connect, but also having you on the podcast to finally shed some light on how this thing is actually supposed to work. I think this will open up a lot of people's eyes to not be intimidated by life insurance, not be afraid of, and understand how it can be a tool while you're actually living when you use it the right way. So guys, make sure that you subscribe to our channel, leave a comment, let Lindsay know that it was a fire episode. Go follow her, tap in with her, and also tune into the next one.